I've worked with over 400 millionaires. While I was a wealth and investment advisor, I've helped manage about $600 million of assets under management and spent over 11,000 hours in the trade to understand how the wealthy built their wealth, how the wealthy maintain their wealth, and how the wealthy continue to manage their wealth and view money overall. So in this video, I'm going to share with you some of the strategies that I learned speaking with over 400 millionaires, and I'm gonna tell you 7 habits that keep people poor, and I'm going to share with you how you can break free of those habits and literally build the wealth that you've always wanted in your life. Let's talk about bad habit number 1, which is keeping up with the Joneses. When people look at their neighbor who has something nice, like a car, a purse, nice clothes, goes on vacation, etc., then the poor mindset thinks, I need to have that too, and they spend the money in order to look as wealthy as these other people. But my friends, remember, looking is not the same as being wealthy. You think your neighbor cares what you have, but in reality, they really couldn't care any less. So why spend your money on people that aren't even close to you, right? Bad habit number 2 is paying yourself last. You work, you receive a paycheck, that paycheck goes into your bank account. First, you focus on all the fun things. You decide to plan your social calendar, you look at vacations, you buy the next cool makeup or cool shoes. You take care of your personal financial picture last. And that, my friend, is not the way to build long-term wealth. The rich mindset here in this case is actually paying yourself first. The first thing you need to do is automate your investment and savings. Set it up on auto and maybe start by just investing $25 a week or $10 a week. When you start automating these investments every single week or every month, your mind starts restructuring the way that you spend money. You spend less on those fun things like vacation, like going out to eat, those types of things. Let's talk about bad habit number 3, which is keeping bad credit card debt. Credit card debt is probably one of the worst types of debt out there. It has super high interest rates. Typically, the average interest rate is around 22 to 23%. On credit card debt, that is awful. Compare that interest rate to what you would actually earn in the stock market, which is around 7 to 9% over the last 50 years. The poor, they keep bad credit card debt. They don't pay it off. In fact, they oftentimes spend more money and they spend money that they don't have. And then ultimately that credit card debt just keeps getting higher and higher and higher as the interest keeps accruing. Now, what do rich people do and how can you get out of that bad credit card debt situation? The first step is really creating a budget. Rich people, at least when they first started building their wealth, they had a budget. They ruthlessly cut out expenses that belonged in their wishes and their wants sections. They only focused on spending money that was in their needs section. They don't make impulse purchases like buying a $5,000 Louis Vuitton bag the next day or whenever they see it. And the other thing is that the rich, they look at the money in their bank account. If they see something costs more than what they actually have saved, they don't spend money on it. Bad habit number 4 is not having an emergency savings fund. Without an emergency savings fund, if there is an emergency like a vet bill or a medical bill or maybe a tire replacement, something like that, what do the poor do? They resort to their credit card and they swipe it and they build up credit card debt. So what do the wealthy do instead? They've started building an emergency savings fund a long time ago. Whenever they had a little bonus or maybe a tax refund, they put any extra money into this fund called the emergency savings fund and they let it build up over time. And they never touched it unless they had emergencies. Now, the wealthy, they always like getting the biggest bang for their buck, right? What the wealthy do is go one step further. Instead of simply putting their emergency savings fund into a regular savings account where the interest earned is basically 0%, they put their emergency savings fund into what is known as a high yield savings account. High yield savings accounts offer a higher interest rate. Bad habit number 5, which is not having a budget. The poor mindset essentially spends money whenever they see it. They go on impulse purchases and they don't really stick to a budget. A lot of people, they get scared by the word budget, but in reality, it's like like a roadmap. It brings you from point A to point B. And point B is essentially saving and investing your way to wealth. And you need to know what you're actually spending, how much, and where that money is being spent. The wealthy often use budget trackers, apps like Mint or Excel even, YNAB, or You Need a Budget. In each of these apps, they are linked with your credit cards and they're linked with your bank account, and they essentially are able to monitor what comes in, what goes out, and where that money is going. A guideline that the wealthy follow is how much they spend on monthly housing debt. So in general, the goal is to spend less than 28% of your gross annual income on housing costs. So examples of housing costs, they include your mortgage, which is composed of your principal and interest, taxes on your property, and insurance on your property. Now, if you don't own a house, then that would equal rent basically, right? Whatever you pay for rent and or renter's insurance. Another guideline is to spend less than 20% of your net, so that's after taxes, on consumer expenses. So as an example, that means your credit card debt or cash advances. And another guideline is to spend less than 36% of your gross income on total consumer debt payments. That also includes credit card payments, mortgage payments, as well as student loan payments, car payments, etc., etc. Now let's talk about bad habit number 6, which is not investing earlier. Oftentimes, the poor mindset doesn't invest. And the reason why is they don't have any money, they don't have any time, they don't know much about it. If you really want something, you'll make time, money, energy, or space for it. And that's what separates the wealthy from the poor. The wealthy, they invest early. In fact, out of the 400 plus millionaires that I've spoken to, I'd say most of them, 90% or more, started investing as early as in their 20s. The reason why is simple. It has to do with the 8th world wonder, which is what Albert Einstein called compound interest. Compound interest is essentially when your money starts making you more money. It just continues over time. And that, my friend, is the key ingredient to building wealth. Even if you invest 5 times more or 3 times more at age 40 compared to what someone at age 20 invested, you probably still won't beat that person who invested when they were 20. And the reason why is simply comes down to time. And a lot of times I hear the poor mindset say things like, I don't have $1,000 to invest. But guess what, my friend? You don't need $1,000 to invest. You can have $5 to invest every week or every month. The point is you start. The other item that I'd want to add here is that the wealthy, they don't necessarily leave all their money in cash. And the reason why is because inflation will nibble away at the purchasing power of your cash. How do you combat against inflation? It's by investing. Because investing returns are typically between 7 to 9%. At least that was what the average was over the last 50 years. And finally, let's talk about bad habit number 7. And that's relying on just one income stream. In other words, they rely on their 9-to-5 job, on their employer, and that's it. But the scary thing is that you're probably not safe, even if you're the CEO of a company, and that's because you report to oftentimes a board of directors or shareholders. So what do rich people do to combat relying on just one income stream? The answer is they build multiple income streams. In fact, the average number of income streams, according to the IRS, the Internal Revenue Service, is 7. Now, some of those income streams include dividends, they include interest income, they include side hustle income, they include capital gains. If you're building multiple income streams, so you essentially diversify your income, then worst case scenario, if let's say your employer goes bankrupt or your employer decides to let you go for no good reason, you have some sort of income to rely on before you find another 9-to-5 job or even before you start your own business. Now, if you're interested in building more income streams yourself, I would suggest you check out my latest course called Income Multiplier, where I literally teach you the roadmap to building multiple streams of income so you can learn the secrets of the wealthy and diversify your income streams. If you enjoyed this video, then I encourage you to check out this video right here that I've linked, where I talk about a little bit more how you can achieve financial freedom and escape the rat race.